in case you're wondering, this is the session on financial innovation for household resilience. So if you find yourself in the wrong session, this is your cue. So my name is Atanu Rabbani. I do two things currently professionally. One is I teach economics at the University of Dhaka, and I also raising two daughters in Dhaka city, which is a challenge by itself. So we have a very interesting panel here today, and I'll just say a few brief words about them. So on my right, we have Maria May, who is heading to different, she's wearing two different hats at BRAC. One is she's heading the Social Innovation Lab, and also she's involved with the Research and Development Unit at the Microfinance Program. And it's very interesting to know that she has a prior life working in the public health issues, so there's something you and I should talk about later. Next to her, we have Parul Agarwal, and this is actually the third panel where we've been together, so it's coming of a habit of ours. She is involved with the Institute of Financial Management and Research based at Chennai, but she is actually based primarily in Kolkata. It's a very interesting organization where she heads and manages the portfolio in the space of financial inclusion. And next to her, we have Mike Kellogg from Philippines, and before that, he has worked in Mongolia and many other places, perhaps. He's an engineer by training, apparently, from California Polytechnic Institute. So it would be great to hear his thoughts on financial innovation and the type of programs and interesting issues that he has been involved with. So I'll allow three of the panelists to spend a few minutes on the stuff that they're doing right now, and then we'll have kind of a internal conversation among ourselves, then we'll scale it up to the audience. I think that will be the most interesting part of the program anyway, before we head off to take our lunch. So I'll allow Mike Kellogg.
Hello? Okay, great. So hello. As he said, my name is Mike Kellogg. I'm with an organization called Vision Fund International, which is World Vision International's microfinance division. Our objective is to increasingly serve the rural poor, and particularly agricultural societies, with microfinance services. And one of the key issues that we have to think about in that kind of service delivery is how to help our clients build resilience. Agriculture is traditionally an area that is not the most financially included, in part because of the fear of serving agricultural communities. And in November of 2013, we actually got to experience what can happen in major disasters in the Philippines. We were hit, as an institution, our clients were hit by a major earthquake, followed 3 weeks later by the biggest typhoon ever to strike land. And we were left with thousands of clients that were struggling with everything. They had no housing, they had no jobs, they had some had injuries, people they had lost, and what we were struggling with was how do we most effectively help them as a microfinance provider. So we spoke with them, we looked at what they wanted, and found that what they were really interested in, what they appreciated was the aid they were receiving, but what they were really interested in was how do I get my livelihood working again? There was a very strong understanding that if I don't have a livelihood, I can't rebuild my home, I can't rebuild my life. So we developed and deployed a loan that was called the Bangon Kabuhayan Loan, translated as Recover Your Livelihood Loan. And that loan was actually a larger, longer term and more flexible loan than what we typically offer. which was a pretty unique approach in the marketplace. There were not a lot of people offering larger loans. And over the next couple of years, we followed those clients and we understood how they benefited from it, what their struggles were. And we found a few key findings from that, which included that we could do recovery lending in a post-disaster context, and it would support people's rapid recovery. So 96% of the people that we looked at 20 months later told us that it had supported their recovery, and 50% of those people said that they were either at their prior level or above prior to the storm. We also found that it wasn't particularly risky for over-indebtedness. That was a major concern, is that perhaps you create over-indebtedness in a situation like that. We looked at both the performance on the portfolio, so how many people did we have to write off post-disaster in post-recovery lending, how many people struggled with repayments, and we asked people, was it difficult to repay? And we found that while there may have been a small subset in the range of 3 to 5%, there was not a significant number of people, or a significantly higher amount than usual, that were facing problems. We also found that it was relatively good business. It was something that we could do sustainably. We could do it at discounted rates, but we could still make enough money to cover all the costs. And because, as I mentioned, we didn't have higher write-offs or substantially higher late payment rates, it didn't end up costing us very much money. But one of the major issues that we did face throughout was how to finance that. The microfinance provider, our microfinance provider there, as well as many others, were struggling significantly with liquidity. As you can imagine, with thousands of clients now affected, not paying, and now trying to do more loans, you have to come up with a lot of extra liquidity. So our next step as an institution is we're continuing to work on how do we build a sustainable system that ensures that finance is available post-disaster, that we're able to be able to do a recovery lending approach wherever we are. And we think that will complement nicely with other resilience measures, financial resilience measures like savings accounts, small loans in smaller disasters, and some particular insurance programs that would help people with more personal shocks like death and some losses of assets and things like that. So that's where we're headed as an institution, and that's all I've got.
So Parul, you're next, and you can choose to stand or sit. It's up to you.
I'm fine sitting. Thanks. Okay, so I'm Parul. I come from IFMR LEAD, which is a research institution based out of India. We conduct experimental and non-experimental research on priority subjects for practitioners and policymakers. We have recently expanded our work in Bangladesh and Nepal, and the study that I'm going to talk about is what we recently completed in northern parts of Bangladesh. To build the context first, so I'll take it from what Dr. Musa mentioned in the morning, that the low resilience capacity leads to social and financial exclusion. And this problem becomes more pronounced in areas like northern Bangladesh, where people are hit with recurrent shocks like floods, seasonal food crisis, etc. And to deal with these problems, usually the first measure that the government comes up with is cash transfer programs. And as far as I know, in Bangladesh, they are mostly physical cash or in-kind transfer programs. Now, based on our study, we found that these programs do not reach everyone. So for the segment that we interviewed, it showed that only 14.5% people received some kind of a relief or aid from such government programs. And additionally, physical cash transfers, they also have problems with efficiency, and they are exposed to loss, theft, leakages, and it's also costly to beneficiaries, both in terms of time and money they have to invest when they have to access these services. So we found that mobile money is really, the network of mobile money in Bangladesh is really dense, and we thought, why not we understand the feasibility of using that as a channel to transfer relief or to transfer money to such a population which is facing recurrent shocks. So we conducted a feasibility study in northern Bangladesh in the district of Gaibandha, and we surveyed individuals pre and post Moga. We also surveyed them during the floods and tried to understand what's going on and what kind of services they require and what their experience has been with mobile money. The reason why we did so is because mobile money has shown positive impact on financial inclusion, poverty alleviation in other countries, especially sub-Saharan Africa. And we thought maybe doing this in Bangladesh could add some value given the network, as I mentioned. And in Bangladesh, the network of mobile money is more dense as compared to some countries in Africa as well. Some studies have also found that providing savings products through mobile money can lead to consumption smoothing, which is again very important for the population we are talking about, because their coping mechanism when faced with shocks is consumption reduction. So we found that people heavily reduce their weekly expense on consumption, especially food consumption, when they are hit with crisis. And that's not the best coping mechanism, of course. There are a segment of population also which is more vulnerable, tries to save and borrow, but that is through informal mechanisms. So for instance, borrowing from neighbors or saving small pots of money in the house, etc. But it's not, again, a safe process to do it. We found that the model of the mobile money, even if it is present in Bangladesh, it's mostly being used for remittances, and only a part of people, like nobody uses it for saving, even if they can save using that channel. So people don't know, they are not aware that they can use that channel to save, but if told, like we told them that that's a possibility, and they were really, they were excited about it. They were surprised that they didn't know. But of course, the kind of offering that the saving product offers is not very appealing to them, because it gives them interest rate only if they could save, say, 1,000 takas over 2 months, or maintain that kind of a balance, which is difficult. But in any case, so we found, so in addition, we found that 35% of our population was heavily present biased, which basically means that they have self-control problems, and maybe a commitment savings device can help them. So they know that savings is a good instrument to cope up in shocks, but they don't have a right instrument, a formal financial instrument that can help them save. And maybe a commitment savings device can help them in that sense. So based on our study, our feasibility study, we are now setting up an experiment wherein we are trying to layer the Bcash mobile money product with a commitment savings device. And we are also trying to experiment with physical versus mobile cash transfer programs to see how they impact the financial inclusion indicators if people start saving more, and how their coping mechanisms change, which currently is heavily bent towards reducing consumption. Yeah, that's it from my side.
Thank you. It's really interesting, and it's good to hear about present bias and all this like behavioral nudge that people are using now, and we can come back to that. So Maria, it's your turn.
Thank you, Otono. Otono's promised to ask us really difficult questions, so I'm just going to keep talking until he physically takes the mic away from me and moves us into that section. So it's a pleasure to be here speaking today, and I'd just like to recognize that from the microfinance program, I have several colleagues out there who can also answer questions about this. Isabel, Tanvir, Walisa, Monir, and I think Fabia might be back there too. Just to give you a little bit of context on BRAC microfinance before I jump into the newer products that we're working on. In Bangladesh alone, we're serving over 5 million households. Last year, we dispersed about $2.5 billion in loans. And outside of Bangladesh, we're working in another 6 countries, serving about 500,000 clients. So I think across the microfinance sector, there's been increasing realization in recent years that the standard products that we offer often are insufficient for households during times of shocks. This is both the loan products and the savings products. Savings are important, but often, again, during emergency moments, it's not enough cash, and families need other sources to draw on. So some of the work that we've been doing on recently is looking at common types of shocks and designing products and services that fit those set of needs specifically. So just to give you a few examples, we know that health emergencies are a huge huge source of expenditure and default for many of our clients. I think that's true in many markets too. And often during that moment, people resort to selling assets or taking very high interest rate loans from informal providers. So we've worked in partnership with our health program to develop a medical treatment loan that's specifically targeted at families facing health emergencies to help them get timely care and treatment. One other new product that we've launched recently that has a lot of interesting components, I won't go into all the details, is an emergency loan for floods. And one aspect of this I find particularly interesting is that we do pre-approval. So when you take your general loan, you are told that based on your past repayment behavior, you've been pre-approved for a credit line if there is a flood. And then that's triggered kind of by the rising water rates. And so this is something where, again, we're both experimenting with a loan product, but also kind of seeing if psychologically some of those kind of business investment decisions, the ways that people use the resources at their disposal will change if they know that they have access to more resources in an emergency time. Those are both on the loan side. On the insurance side, a product that we launched last year is a credit shielding insurance, because again, death of an income earning member is a huge shock for families. So this is something where it's a voluntary product. Clients can insure just themselves or themselves and a spouse. And in the case of a death, the loan that they've already paid off will be given back to them. So it saves them. And then also, it's actually good for BRAC as well, because we get the balance given to us. And then lastly, just one more thing I want to highlight, and again, this draws, I think, a lot on what Parul was saying, is across BRAC, we've been doing a lot of work with mobile money. Specifically with the company bCash, which is a BRAC Bank subsidiary and Bangladesh's largest mobile money company. And I think this is worth highlighting for a few reasons. One is that if you look, in Bangladesh, there's now about 30 million people using mobile money, but the vast majority of them are men, about 80%. And in addition, if you look at how, again, the kind of people that BRAC work with use mobile money, it's often through agents. So they don't have their own wallet, they don't know how to go through the steps on their own, and so there's actually kind of this dependency created on another person. And so I think through BRAC introducing this as a repayment option, a way to make savings deposit, it's not only a form of convenience, but it's packaged with financial education for a very excluded population. And so we've been trying this within the microfinance program across a range of other programs as well. So we did some disaster relief payments with our disaster management and climate change program. We're paying community health workers using mobile money. And I'm happy to go into more details later, but I think one of the most exciting things is that we're seeing that once we get people onto the bCash platform, they find their own ways to use this. And it actually becomes a form of resilience that enables them to draw their own kind of resources informally, to make payments when they need to do a lot of things that they weren't able to do as well before. Thank you.
Great. So first, I have a very kind of a general question, primarily for Mike and also for Maria. So when we think about resilience, right after disaster, and people are, loan can play a role, but it also seems that insurance is more natural financial services to take advantage of. But we don't see that much in Bangladesh, and probably also it's true in Philippines. So what's your take on that? Like, what are the primary barrier to access insurance?
Great question. So I am going to come out really strongly in saying loans, I think, are a better starting point for contexts like Bangladesh for a few different reasons. One, I think insurance is still, for many people, a fuzzy concept. You don't get something back at the end. And so that can be a difficult concept to explain and for people to fully grasp, and also these present bias kind of things. And loan products are voluntary. So the moment you need it, again, if you know you have access to it, it is available to you, and it can have a lot of the same benefits that you see from insurance products generally. So I think those are two things. I mean, one other comment just to make is that there have been a lot of experiments on insurance and very, very few successes. Right? And so there's something that we either haven't figured out, we haven't done right yet, or we haven't figured out yet to do it in a financially sustainably way has just proven like a hard nut to crack. So, yeah.
Yeah, I would just add to that what you're saying. There hasn't been very many successful examples, and among the problems is a perceived need to pay out frequently, which turns it from being an insurance product into a giveaway product. And so one of the things we're actually looking at in what I talked about is creating an insurance-backed liquidity fund that ensures that there is money available to the MFI to do lending, but can do that at a fraction of the cost of what it costs to try to administer insurance, disaster-type insurance product to individuals. Therefore, we can sustain it much better at much lower cost, based on the research we've done, at a cost that we can actually pass along in regular loan pricing to customers, so that it will sustain itself and we won't have to try to subsidize it.
So kind of insure at the organization level rather than the beneficiary level, sort of. Sure.
Sorry, just add one more thing. I think the other thing post-emergency is that people need cash in hand immediately, right? Like we were talking yesterday about people in the Philippines perhaps being a bit more patient and being willing to wait. But the reality is that, I mean, we've heard a few examples of, even just clearing dead bodies and that being a primary thing. So I think, in a crisis moment, every hour it takes to give people money counts. And insurance companies, again, tend to be far away. They tend to want documents. They tend to have systems in place that just create delays. And so again, loan products, if they're immediately available, I think can be extremely powerful for that reason as well.
And we have seen not just in case of these basic insurance products, but also in case of agriculture insurance, which like weather insurance, crop insurance, which have proved to be a failure because they are usually push products if advised from the government. Otherwise, it never generates a pull because it's too far-fetched. Like the returns are too far-fetched and people are not able to visualize it for some reason. And it's, again, very complex product. So as Maria mentioned, the concept of it is very fuzzy and, like people, people just don't see the need of it.
So, actually, earlier the audience also, what I liked about Parul's talk is actually you spent some time before the experiment. Like there was a process by which you actually reached the type of product that you wanted to experiment with. So were there any kind of surprise, like you actually went to the field with some prior, which kind of changed after that process? Like how, in the process of learning about what exactly to experiment with?
So earlier, the idea was just to experiment with digital cash transfers, but the savings bit came in later. Like we are experimenting with some of the commitment savings devices elsewhere. Like we are doing one in India, and there are other countries where they have proved to be a success. But here, people themselves want a savings product, and they have an easy access and experience with digital technology, like a Bcash mobile wallet. Even if the model is assisted, they know what is happening, in that device. And if they are encouraged and if they are told about such a savings product, then they can actually start using it. So that was something that came in after the feasibility study. Earlier, it was just about digital transfers, but we think that layering it with a savings product can lead to a big kind of revolution, maybe.
That's fantastic. So I think it's true for Bangladesh, but India is much more ahead in kind of the development path. So Bangladesh has recently been dubbed as a low middle income country. So there seems to be some sort of change in the aid paradigm, like availability of cheap financial resource, which also has implication for the kind of fund that's available, especially for post-disaster. So what's your take on that? Is it really affecting the business that you're in? Like this global aid paradigm shift for Bangladesh, for Philippines? I mean, it's very interesting because these three countries are three different places in kind of the development trajectory in some sense. But what do you think? Do you think the business, you need to be more vigilant about the types of financial innovation that you come up with? Is there more pressure, so to speak?
I think definitely that's true, and a key part of what we're trying to figure out is how do you ensure that the money is there when it's needed, regardless of what the donor environment looks like at that moment. One of my favorite quotes comes from the president of our parent, World Vision, who said that media coverage is a very poor proxy for human suffering. And the media coverage is what brings money in. For agencies that do large-scale humanitarian relief, media coverage generates huge amounts of money coming in. So an event like a Typhoon Haiyan that gets lots of coverage generates a lot of money, and there's more resources to go out and be able to support larger number of people. But other types of huge humanitarian issues, like for us today, Syria, just do not generate the same kind of money that we get for a Typhoon Haiyan. But there's more people over a longer period suffering more consequences from that event than there is from Haiyan. So there is a key problem with how do you make sure that the money is in the right place at the right time. And so by planning ahead and building funds, building other resources to make sure that you can deploy it where you need it, you're hopefully addressing some of those gaps.
Yeah, thanks. I think the Bangladesh microfinance industry, at least, I kind of think we're on the verge of hopefully disruption, actually, in terms of where we are. Because again, the model we have here is quite mature. It's been around for several decades. It has evolved, but maybe not as much as some people would like to have seen it evolve. And I think, one big change we've been talking about recently is, we have people come to these village organization meetings to give their loan installments. People are busy. They don't want to come. They got other things they got to do. A lot of women are now working in jobs. They don't have time to kind of come to sit in the village and to talk for a long time. So even kind of the fundamental ways in which we interact with our clients, we're having to think about how we can do that in a way that, again, best fits their life. Come up with products that are targeting groups like job holders that we missed before. But I think it's complicated because I think one of the other things that we're talking a lot about is this digital divide, right? And so again, when you think about the younger clients, people coming in that we want to bring into our program, a lot of them are very comfortable with phones. They're on Facebook. We talk about things like SMS notifications, and those are things that they're comfortable with. But then you think about a client who's been with us for 20, 25 years, she doesn't have that same kind of digital literacy and comfort. And so if we move too fast, we also risk leaving certain people behind and leaving them vulnerable in ways that we don't want to do. So I think it's actually trickier in a lot of ways because, again, how fast do you move? How do you bring people along? Those are some of the issues we have to think about at the same time.
I agree with Maria there, but I think there could be ways in which this knowledge gets trickled down to, not exactly the knowledge gets trickled down, but the clients who are right now depending upon agents for transactions, maybe they depend upon their family members or youth in the household who are more comfortable using digital technology. But there's no research that right now proves that that graduation or that trickle down happens. But if it does, then it could be, I guess, a good thing. And we could ultimately cover those clients as well. I don't think India is more developed as compared to Bangladesh when it comes to financial inclusion or microcredit. So we are shifting from a phase wherein microcredit meant financial inclusion, right? But now, so in India we have this huge savings program also, which is self-help group bank linkage program. But it's not working. So it seems that things are saturated and the sector itself is calling for innovation, be it in terms of delivery mechanisms or product diversification. And what we are discussing right now here in this panel is about product innovation, like frugal innovation and better delivery mechanisms. So I think there's a long way to go. And in that sense, in terms of digital money, Bangladesh is way ahead than India.
So I'm really curious. So what's the role of pilot in the type of innovation that you do? Like, for example, if you really want to learn whether a particular innovation is working or not, it seems like small scale piloting is like if I were to do it, I would do it that way. But for example, BRAC is large organization, but even the pilot that BRAC does is sometimes large for many small countries. I mean, so what's the role of piloting, and how can you learn mistakes from those piloting, and then how can you instill the culture of this learning in the organization that you work in, or it's still there, like what are some of the good or bad stories from kind of learning from innovations, from whatever role you have played?
Thanks. Thank you.
You mentioned BRAC.
Yeah, thanks. So if we could like summarize that answer in like 2-3 minutes, I feel like we would have like a product we could bottle and sell to the whole world. I mean, I guess one, yes, you have to pilot. I think when you're dealing with complex systems, there's no kind of substitute for actually going in, trying something, realizing that what you're trying is probably, again, just like a good enough solution and will need several iterations. And so I think the way that BRAC sets up its pilots, it's again, after a lot of formal or usually informal discussions, but the expectation is that it continues to evolve potentially forever. I think one thing that, at least in my observation, that I think BRAC does interestingly is actually it doesn't scale, like BRAC and scale are synonymous, but we don't scale right away. So one thing I find interesting, for example, I can talk about the microfinance experience or experiences from other programs, but we actually sometimes take a lot of time at the, say, like 5 branch phase, because that's the scale at which you can really learn. And once it gets bigger, you really have to start thinking about standardization, compliance, monitoring, all those kind of second generation things that come with scale. But when you're at a smaller phase, you have the time to go talk to the clients, to do the hand-holding, to do the follow-up, to make quick decisions that, again, can be implemented very rapidly. So it enables you to evolve. So BRAC often does like a very small pilot and then does kind of like a middle-sized pilot, say like 100 to 200 branches, just to see, okay, do we have the management structure right? Do we have the systems in place? Now the model's more or less been standardized, so now we can just plug it into the system and go from there. But the separation of the scale and the learning phase, I think, is an important kind of insight in how BRAC sets things up.
Maria, I have a question for you. So at what stage do you get a buy-in from other stakeholders in the ecosystem? So it's not just clients and the supplier, right? So there are other stakeholders like local institutions or policymakers, et cetera. So like at what stage of these experiments do you coordinate with them and get a buy-in from them?
I'm tempted to pass the mic over to somebody in the audience right here. At least for microfinance, what I can say is that I think we have an ongoing relationship with the regulatory authority. And so, again, it's more of a conversation. So when we have something to share, often like a small demonstration, we can go to them then and kind of open up a conversation about those types of things. So we don't want to wait too late, but you also kind of, if you have a very theoretical conversation without any results to show, it can be kind of less.
Do you want to?
I suppose the only thing I might add to that is, in our experience with Hyann, we were going in kind of blind, and what we did was set up a structure that allowed us to iterate really quickly. So we would. We had a strong team that would sit on the ground and work directly with the first groups of clients that we were lending into. We collected a lot of data, we analyzed that very closely, and we made adjustments as we moved ahead for several months until we kind of settled on something. And then, but throughout that, we continued to collect huge amounts of data, which we then have gone back and reviewed and analyzed to try to understand what different tweaks that we took at different points, how that affected things, and what we might want to do differently in the future. And I think the final component of that is that as we look ahead, what we want to do is continue to develop that stronger evaluation component so that we potentially test different types of operations, different timings, and other questions that are still out there, and understand what is the most effective method for this type of intervention.